Hello traders, welcome back to the channel. This is January with Trading the Charts Pro, and guys, here in this video I'm going to be breaking down what it is like to trade the trend, as Wall Street likes to say, and I'm going to break down in this video how you identify the three trends that the market typically throws. Stay tuned, we're going to break it down right here right now. Alright traders, so the three trends that the market will throw off is a uptrend. This is the number one trend that bullish traders love. The second trend is a downtrend, and then the third trend is what is called a sideways channel or just a sideways consolidation. Now let's dive deep and start to break down these and learn how to identify them. Alright, so first we're going to start off looking at DoW Theory. And all DoW Theory really tells us is that a market that is in a upwards trend is a market that is making a series of higher highs and a series of higher lows. What this pretty much means is that the market has what is called impulsive moves and then what is called corrective moves, right? And the corrective moves are just the moves that pull back, and then impulsive moves are the move that propel and continues to move upwards in an upwards motion. So now how do we identify the beginning of a uptrend as it states by DoW Theory here? So DoW Theory, market is moving down, the market finds a low, right? And then from there market recovers, move up, first impulsive move, and then the market pull back, get a corrective move. From there the market breaks out of this level. But what is super important about this level is that right at this point, this was the first high that the market made. Market breakout, move up, we got the second high. All right. So as far as a series of higher highs and higher lows, this would be our second higher high right at this point. And then right here, this would be our second higher low. So this is the point that I come in as a trend trader and I map my uptrending support level to the upside, and I will also map my uptrending resistance, because we always have a resistance and we always have a support. Support is where we're looking to buy, resistance is the levels that we're looking to sell, and typically you're buying the higher lows and you're selling the higher highs. Typically the higher high is going to be that last peak the market made before it sell off. But you don't have to wait for the peak. All you got to know is where's resistance, and when it gets to resistance, you get out of the trade. Yes, the price action can break out and go straight to the moon, but you are looking for what is called predictable, repeatable patterns. So you're looking for things that is going to happen consistently over a period of time, and the consistency of that pattern will help you find consistent, repeatable patterns, all right, and profits. And until the trend will be over, when the market comes up, makes its final higher high, comes down, breaks the higher low, and then we get a bounce and we get our first lower high. When we break down and take out that higher low, this means that the trend is changing, and we're anticipating that this market is going to come down and it's going to make a new lower low. And that's when we start to move into a downtrend. And a downtrend, my friend, is just a market that is making a series of lower highs and a series of lower lows. All right. So let's dive a little bit deeper into breaking down these trends individually, so that we can know how to basically take advantage of these. Okay. All right. So here we are. We have a very nice chart of Chewy, and this chart is representing, or it's a representation of a uptrend. And a uptrend is simply a market making a series of higher highs and a series of higher lows. In a uptrending market, we have our uptrending support and we have our uptrending resistance. Now guys, we are always looking to buy this uptrending support, and this is the level where we are looking to buy the pullbacks. All right, so this is what we like as a trend trader. We're looking for price to pull back to the support. When we get the pull back to the support, the consistent pullback and a bounce at support, this is where we come in. We look for the confirmation at these levels, and this is where we go long, because we already know that this market is in a uptrend. After we get the bounce, price comes back to the resistance. This is where we ring the cash register on the uptrend. So guys, it's really simple to find stocks that are showing a uptrend very consistently and identify your uptrending support, your uptrending resistance, and be diligent and disciplined in trading this trend. All right, so now we're gonna basically move on to breaking down our downtrend and how do we take advantage of the downtrend. In this example, we are using a real-time scenario, which this is gold, right? So the stock market was in a uptrend, or still is in an uptrend, and we have gold moving down significantly into the same period. All right, now what is a downtrend? A downtrend is a market that is making a series of lower lows and a series of lower highs. All right, when we look at the chart, we have our downtrending resistance and our downtrending support. All right, this is a market that we will always short because it's going lower and lower. When we look at the chart, this is the peak, this is the high, right? So we have our high, boom, and from there we have price action literally breaking down, coming down, hit the support, we run up, price makes our first lower high, price breaks down, we have a lower low, price comes back up, this is a lower high. And guys, all this identify based on DoW theory is that the market is in a downtrend. When the market is in a downtrend, this is where you are coming in to this market and you are selling, going short with your risk management above the peaks of this level, and you're managing the trade as this thing slides down. When it gets down to the support levels, this is where we cash out and we anticipate or move on to find another consistent chart. So quick summary, this is what a downtrend is. This is what a downtrending market looks like. If you like to trade this market, go out, find stocks that are in a downtrend and identify the pattern. Go out, take advantage of the pattern until this market is no longer in a downtrend. All right, and in this case, we see clearly that gold came down, we hit a double bottom, right? And from that double bottom, we got a breakout of the downtrend, and typically a double bottom is a reversal pattern, which we'll cover a little bit more as we continue this series. All right, so guys, downtrending market is a market that is making a series of lower highs and lower lows. All right, let's continue, and we're going to move on over to breaking down the sideways channel or just the sideways consolidation. Now, what is a sideways consolidation? Guys, this is a market that is oscillating between a horizontal resistance and a horizontal support. This is one of the easiest patterns to trade because we have a well-defined support, horizontal support, where we're anticipating that every time price gets back down to that level, that's where we will come in as buyers and we will buy, looking to liquidate or sell our position when price gets back up into the resistance area. So as a trend trader, you have 3 patterns that you typically look for. You look for stocks that are moving in a uptrend. You will look for stocks that are moving in a downtrend, or you will look for stocks that are moving in a sideways channel or a horizontal consolidation. And the reason why it's super or highly probable and profitable to trade trends is because, as you can see, these patterns, they're very consistent. The only one thing you have to do is go out, be diligent, identify the stocks that are trending, and trade the trends until the trend is the trend no more. Guys, if you like this video, I have more coming in this education series. So subscribe to the channel, and I will see you in the next